The U.S. dollar index is set to end the week higher after the Fed raised inflation forecasts, citing tariff concerns. Richmond Fed President Barkin backed a moderately restrictive stance, though the dollar weakened Thursday with looming tariffs. The euro declined after the U.S. announced a 25% tariff on non-U.S. cars, with threats of stricter measures against the EU and Canada. The EU plans retaliation, putting Germany's auto sector at risk. The ECB cut rates by 25 basis points in March, and official Cipollone signaled further easing. The yen weakened to 151 despite strong inflation, with Tokyo's core consumer price index rising by 2.4% and hawkish signals from the Bank of Japan. Policymakers cited rising wages and spending, while U.S. tariffs threatened Japan's car exports. The British pound posted modest gains despite weak inflation and a downgraded growth forecast for 2025, which was revised to 1% from a previous estimate of 2%. New welfare and tax measures aim to reduce borrowing long-term, though it's expected to rise in 2025 to 2026. Inflation fell to 2.8% in February, in line with BOE expectations. Gold hit a record $3,080 per ounce on Friday, supported by trade tensions, Trump's 25% auto tariff, strong central bank buying, and ETF demand. It's on track for a fourth straight weekly gain and the strongest monthly rise since March 2024. Silver surged above $34 per ounce, its highest since October 2024. Tariff-driven inflation concerns and expectations of 2 Fed rate cuts this year also supported prices. Next week's calendar is packed ahead of Friday's U.S. non-farm payroll report. Key data will be released from the U.S., Europe, and Asia. China will post manufacturing PMI, Europe will release inflation figures, and Germany's data will be closely watched. From the U.S., PMI, JOLTS, ADP, and unemployment data will also be in focus.